Jeff, Zach, thanks for joining me.
Thanks,
Hey,
Steve.
Dave.
Oh, good to have you. Well, we're starting to get more data from a little bit of the first quarter of this year. Definitely how last year wound up, and starting to talk about some more trends we're seeing in commercial real estate. So wanted to kind of touch base with you guys and maybe kind of get things started off with retail, which has been surprisingly strong. The death of retail was definitely exaggerated, and maybe some of your thoughts as we're finally moving forward in 2024 and starting off with the retail segment. What do you think are some of the highlights for investors there?
I think it's kind of the same thing we've said all along. Retail's not it's not dead, it's not dying, it's just changing, it's evolving. But I think retail will remain strong because people still like to tangibly touch before they buy. Um, the other side is
Try
the other
telling that
side
to
is
my
you got
wife.
Amazon where you can you can order it and then send it back if you don't want to. But I think even that model may change a little bit because of the logistics and cost of sending and resending.
Look, I'm in agreement. I joke about my wife. She likes to touch at home, knowing that she can return it, and she doesn't mind running over to UPS and sending it back. Doesn't cost her anything other than 20 minutes of time. But we've talked about this before. My opinion is still the same. Experiential real estate is never going to go anywhere. We're social creatures by nature. There's things that can supplement that, but there are still going to be areas that we're going to congregate and things that we want to touch that that it's never going to go away. So I think retail is going to see a lot of strength and probably tailwinds.
Yeah, and I'm gonna kind of go with just to kind of restate something that's been said a hundred million times before. Location, location, location. So what we're finding with retail is you have a good location, good demographics, good economics, or whatever. Maybe it's changed. And to your point, Zach, yeah, it's gone more experience wise, or maybe it's gone to a shift to more luxury goods where it's more important to touch them, or maybe that strip mall now has some medical component to it, or the traditional shopping mall now isn't a traditional shopping mall and it has a high-end hotel at it. But the one thing that hasn't changed is if you buy a good location, you find a use for it. And it works for almost any trend. And I think that's just what we're seeing is what the malls look like, what that retail strip mall looks like. Yeah, it's changed a bit, but you're going to do well for yourself if you focus on an area that's business friendly, that's got good demographics, that's in a good travelable location, all those things. So I think that would just be kind of the point I would make
So
is that all
Florida,
these hey, business friendly, attracting immigrants, positive demographics. I think the matter is just like find the right price, which is what we're working on. Um, let's move to industrial. Any kind of thoughts on the industrial segment, guys, in terms of what we're seeing and the trends we're seeing for investors?
uh,
Overbuilt,
yeah,
over pursued.
and especially where I'm seeing a lot of it in Florida is up and down 95. Brand new builds, million plus square feet of industrial warehouse space, all trying to be leased, and it's been trying to be leased for 6, 12 months in a market that says there's 4% vacancy. I'm not necessarily seeing it. And I think at some point they're trying to attain prices per square foot that just aren't reasonable when you've got that much vacancy in the area. I think prices, the rental prices are going to come down dramatically.
I don't know about dramatically. I could see them stabilizing or falling, and to what degree we can debate. But a real world example is Savannah.
Yeah.
When we bought in Savannah 4 years ago or 3.5 years ago, we know that market. We know that that's one of the biggest industrial and logistics markets. It's not the only one that we own in. And we came in, 1 million square feet were being built at a time when they wouldn't subdivide or lease to anything less than between 100 and 300,000 square feet per space. Those developers have maintained all of the occupancy, but have stopped building as much. There, instead of 10 projects being built a year, there's one or two. So you can see that there's kind of a normalization that's occurring. Self-storage is another example. those rental rates were rising dramatically. They've kind of leveled off. They're starting to experience a bit of a dip in vacancy. It all depends where you are. You have to be same comment as retail, selective about where you want
Yeah.
to be, so that you don't have the rug pulled out from under you and see a dramatic drop. You know, location will determine your staying power.
Yeah, I mean, I would second all that. That a lot of this is priced in. It's hard to find the right opportunities. There are definitely a lot of positives in the space. I mean, the reshoring trends for real, pulling some manufacturing back from China, that really does seem to be happening. You can't argue that more data centers are being built and all that. The challenge is everybody knows all this, and a lot of it's priced in, and it just is a challenge to find attractively priced assets in the industrial space. Let's move to office, which, according to the media, is dead, buried, and never going to rise again, even in zombie form. A few thoughts on office, because we know that's overstated and overly simplistic.
Sure. Office itself depends where you are. You've seen problems with it, but the media is usually 6 to 12 months behind cycle in what they're reporting. That's why you buy the rumor and sell the news. Everyone sees that and they're selling right now. We're big proponents of office. Construction starts of Class A properties and really high-end offices are up. Renting is flying off the shelves. It's the opposite of what you're seeing in the news. It's kind of what we've been saying since our last video. So this update really is that trend is continuing. Office is actually doing strong, and we're seeing an uptick in activity, not a decline.
Yeah, I'd actually add to that as well. It's like I think when you start talking office, talking about Class A, 4 or 5 star office products, it's a different animal than when you're talking about where the average person is looking for office space for their employees for administrative tasks. They don't need, all the glitz and glamour. They want 4 walls and a roof. They want space to rent, and I think there's a lot of opportunity in those, Class B, Class C properties.
Mhm.
Yeah, and that's actually, I think, an interesting trend that's starting to show up in the data, is that there's a trend towards Class B and C in the right locations. And then we've been talking about the whole mixed use things that people want to work and play and shop kind of in the same sort of environment. That's an enjoyable environment to be in. And we seem to be starting to see the trend towards B or C even being more favorable than A that's not in one of those locations. And I think that's just a big trend we're seeing, and I think it kind of also plays into a little bit of our next topic, which is
Residential.
multifamily, yeah, residential.
I was gonna jump right in
Yeah, go for it.
because you got me thinking about something. Um, it's like a bell curve, right? On the very, very high end, furthest, are the trendsetters and the people that want that very, very high end office or apartment or industrial, whatever, and they're willing to pay for it. And what you're finding is the normalization that's occurring is B and C is really where most people want to be at and has been kind of ignored. And it's anyone's guess how long it's been ignored. You could argue a decade or a decade and a half, but you're seeing a lot of opportunity of catch up where rents are rising to support the valuations of properties. Properties are not overpriced, and you're not getting 4 walls and a roof just, dirt cheap, but you're also not paying $800 a square foot to get like the little
That's right.
espresso bar that you're not going to use. You get something that's in between that has some amenities. It's very well done and it's a great location, and you're not paying through the nose for it. And you're finding that in especially specifically in multifamily, we're finding a lot of opportunities to take some older product and revamp it in a way that's really nice for working class, blue collar, or even younger white collar. When you say low income, anything under 100 grand today sounds like it's low income, even though it's not. We know the difference, but you're giving them a very nice place to live where you're not paying for the rooftop rainforest garden that none of us really kind of use. You get an outdoor fire pit. It's the same kind of thing, and I'm not paying an extra $700 a month for it. So we're starting to see a lot of that, which is great opportunity.
Yeah, I definitely agree. I'm 100% on that. And I think that's definitely something we're going to be talking a bit more about. So, thanks a bunch, guys. Hey, if you enjoyed this video, give it a thumbs up. Click subscribe if you haven't. Thanks for joining me again, guys.
Thanks, guys.